You are listening to ChartingWealth.com for Wednesday, the 8th of August, 2017. We continue to see this market struggle to try to stay up. We're going to cover these charts for you today. We're also going to start a new thing here on the program. At the end of the program, we're going to start dealing with one or two of your questions, important teaching points, things that we think could help you. If you just want to listen to the chart review, feel free just to do that. We'll try to keep that under 10 minutes. Then we'll get into a question or two. And again, it's to do a couple of things. It's to encourage you to send questions, things you have concerns about, stuff you want to learn, and also to make sure that those good questions are discussed, that we don't lose the ability to simply answer someone in writing and not share it with the rest of you. So again, we'll pick and choose from the things that we think are most important. We're always happy to hear from you. Always try to answer all of your emails. Let's jump now right into this market. What do we see going on? Well, the S&P 500 down for the day about 0.25%. The NASDAQ 100, that is the Qs, down 0.17%. This market just doesn't seem to be able to hold up. We also see TLT continues to sort of run sideways. It was technically down for the day 0.35%, and gold was up 0.31%. Let's jump right in first to the S&P 500, again down about 0.25% today. As we look at this weekly chart, we can see that we still don't have a weekly vertical crossover appearing. We see the market appearing to be topped out somewhere in about the 247 range or so. It actually hit that all the way back going on 4 weeks ago on the week ending the 21st of July. So again, we're going on into a fourth week as we continue to watch the market that appears to have topped out. Now, there is room on the Bollinger Bands, of course, for it to continue to zoom up. The derivative oscillator is still in the positive and getting larger, but our main indicator, the price percent oscillator, just won't click over. So we'll continue to see what's going on, what's the rest of August, September, and of course, remember, all the crashes occur in October. So again, doesn't mean that's coming, my friends. We're not forecasting. We're trend followers, but we do not have a trend to follow at this point. Weekly is still down. If that 2-day chart, we'll zoom into that. Take a look at the 2-day. The 2-day does appear to be closer and closer to crossing over, going down. We've seen it sliding sideways since all the way back on the 26th or so. Market's just been sliding sideways, sideways, getting closer. We see derivative oscillator losing energy on the 2-day chart, and the PPO is now headed down toward the red signal line. What's going on the 4-hour chart? It, of course, huge doji at the end. Well, not a doji, a spinning top at the end of the day. Big wick on top, big wick on the bottom, portending lots of indecision as it kinked over. Popped up in the morning and then lost all of that, popped right back over in the afternoon. Again, this market is struggling to stay at its highs. So we'll continue to watch and learn and see. And when we find a trend for you to follow, you'll be the first to know, my friends. Let's keep looking. The Qs down for the day 0.17%. Remember, but the S&P and Qs and gold was up yesterday. And of course, TLT was up. They're all three down today. Gold is up when it was down on the prior day. What do we see going on with TLT? Well, it has actually topped out since sometime back on the week ending the 21st of July, even a week earlier than the NASDAQ 100, holding somewhere around the 144 range or so. Derivative oscillator is losing downward momentum, but the PPO, the price percent oscillator, our main indicator, moving sideways and has been since the 21st of June. It won't cross over, going up either. We have the 2-day charts in a confirmed uptrend, weekly chart in a confirmed downtrend. That schizophrenia means we are not trading. We are waiting to see which is going to lead. Is the 2-day going to be strong enough to pull the weekly over, or is the 2-day going to succumb to the weekly and crossover going down? Appears to be getting closer. Hasn't happened yet. Derivative oscillator losing energy, and the price percent oscillator sliding sideways. As we tune into the 4-hour chart, we can see that it crossed over going up in the morning, but then started losing that energy. Has not crossed back over like the S&P 500, but that may be happening. Big wick on top that got pushed down by the bears. Little bit of a wick on the bottom, not quite as long, pulled up by the bulls. So we'll continue to watch. Market topped out both morning and afternoon about where equal. So we'll continue to see where these charts lead us. And once we have a confirmed trend, remember we're trend followers, that's where we'll go, my friends. And these are the summer doldrums. Don't get discouraged. Why? Not a lot of volume in the market in the summertime. Market has ups and downs, sideways, who knows? Very, very difficult to trade. But the fall winter trading zone, the fat time of the year, is like always, it's coming. It'll be here. So we'll continue to practice trade and learn. That's what this is all about. Okay, now let's go to bonds. Also down 0.35% for the day on the weekly. We can see we have a confirmed up move on the bonds since all the way back in February the 3rd of this year. Bonds have slowly been moving up, been sliding sideways though since bonds peaked out back on the week ending the 30th of June and dropped for the 2 following weeks, and then starting on the 21st of July, it's been sliding sideways going on 4 weeks now. So again, still in a confirmed up move. Let's check out the 2-day chart. It looked like that 2-day was going to cross over, but just hasn't been able to do it and has fallen off. Now again, remember, as we've been saying every day here for a while, don't forget the inverse relationship typical between bonds as a safe haven in case the market's not doing well. So the bonds, just like the market's trying to figure out which way to go. If the market starts to crash, bonds will most likely zoom. And if they do, we're already pegged because the weekly chart is already in a confirmed uptrend. So we'll be waiting, we'll be willing, and we'll be able to jump into a practice trade if and when we have that crossover going up on the 2-day chart and a parallel move, or there's enough downward momentum that it rotates that weekly chart over. Now let's glance lastly at the 4-hour chart. It has finally, since the 1st of August, it's now rotated and crossed over going down. So again, we'll just continue to watch and see what plays out. We can't make the market do what we want, but we can darn sure follow its established trend when that occurs. And again, if it doesn't occur, we don't trade. Once it does occur, we then look to trade, whether you're buying calls or the ETF itself going up, or you're buying puts or an inverse ETF going down. And again, we're not a stock calling service. We're an education firm. We are talking about only virtual trades. This is what we want you to practice. Now, lastly, we'll take a look at gold. What's gold doing? Well, gold on the weekly chart is trying, as it did over the last week, to cross over going up. And we can't call a crossover, a weekly vertical crossover, until the week ends. Right now, it's a spinning top, a red spinning top showing lots of indecision, tending down. But that doesn't mean anything until that candle closes. And remember, we only have 2 of the 5 days it takes to make that weekly candle. Gold is trying to cross over going up. What's going on the 2-day chart? That 2-day chart lost its momentum, is trying to move up a little bit. Again, it was an up day for gold, 0.29%, but that doesn't mean that it's resumed its climb, at least as far as the 2-day chart goes. Now, lastly, let's take a look at our 4-hour chart. What's it doing? Well, it's been flattening out somewhere all the way since what? It hit actual, about the same low as it did over the course of the day on Tuesday. It did that all the way back on the 4th of August. And gold, again, crossed over going down on this 4-hour chart back on Wednesday, the 2nd of August, and rushed down big time on the 4th and has really been moving again, tending down that whole time. We do look and see that the derivative oscillator's lost some of its downward momentum, and the PPO is not going down at the same angle that it was. It's kinked to move sideways. So again, those of you who use the 4-hour chart as a total trading chart, which we encourage you to try because it works time and time again, except starting in about mid-December through about mid-January. We encourage you to practice trade gold, whether you're selling puts, if it's going down as it has been since around the 2nd, or if it's going up and you're buying calls, or you're buying GLD itself, or you're inverse trading when something goes down. The problem with DGZ is that the difference between the price, the ask, and the bid is so high. It just does make it difficult unless gold is just crashing. So again, we'll continue to look at these things, keep you posted as we move through these events, as markets continue to develop day after day. Remember, fill out your daily market worksheets, your weekly market worksheet once a week. And when you do practice trades, make sure to use your trade worksheet. All of that stuff is available if you subscribe, only if you subscribe to our daily market review. Absolutely free. You have to do that at chartingwealth.com. In addition to that, you have available to you all the great training we have at our website for free. And when you subscribe, we will, of course, send you the link to the How to Read a Stock Chart video. We'll give you the PDF files for all 3 of those worksheets, along with our layout that we use at freestockcharts.com and how to properly upload that layout. Okay, let's jump into, if you're just listening for the review, we finished that. I do want to cover a couple of questions that I have had from listeners. The first is, and I get this, I've been getting this a lot lately, these moving linear regression lines, what do they represent? Folks, if you can help us figure that out, we have studied them over and over and over again, and they really don't seem to do a whole lot for us. We have looked and looked and looked. We originally set our charts up with them, hoping that we would find something on them. I may just remove them in the near future since I have all these questions about what they do. Of course, when they cross over, what does it really portend? Probably a strengthening of the down movement or of the up movement, but they take so long to correct that it really doesn't do a whole lot for us. If any of you have been using these moving linear regression lines, the 30 and the 34, or any other numbers that you might put in there, they're periods. So whatever you might use them for, we would love to know anything that you get out of them. But for those questions that I keep getting about what are they good for, right now, nothing. They do help us just sort of see the flow, and it's not, again, remember, the charts we use them because they're graphical representations of price movement. And we as human beings, over centuries, over millennia, have been trained, our brains have, to recognize shapes and movements and visually. We are primarily visual animals. Yes, we do use a lot our ears, our sense of smell and taste and touch, all that. But visually, the acuity, if you can recognize the lion hiding in the bushes and you can see the predator or the prey out in front of you, it made you a better hunter, a better survivor. And of course, we utilize these graphic representations of price movement because it's so much easier than just having a whole bunch of numbers sitting there in front of you. Very hard, very few people could make a great deal out of that rapidly, like you can do with the Heikin Ashi candlesticks, like you can do with the PPO, the DO, all the things that we use. The other question I get some is, what's this exponential moving average, the 3 period? We use that just to connect the candlestick so we've got a decent connection with those, and it pulls it together so you can sort of see the flow better. But again, no real answer to the moving linear regression lines, and we may, just because we keep getting so many questions about them, remove those in the future unless some of you can convince us there's something good about them. Next question we had is, we had a person ask us, why don't you follow oil? Well, you know what? You can follow oil if you want to. As we go back and look at how our charts work with oil on the weekly, we do see that our charts, at least in certain time periods, can be accurate. Other time periods not on that weekly chart, but there are several time periods where the flow of oil has been a nice clean downward momentum, nice clean upward momentum over certain periods of time. Others, it can get herky-jerky, but typically when you see that happen, usually it will not let you into that trade because the 2-day will many times not hold up very long, or the 4-hour will not back up enough to ever let you get into a trade once the weekly vertical crossover occurs, or will get you out very quickly. So again, if you're interested in tracking oil, we are not going to add another ETF to review at this time, but I would encourage you to use our charts and track oil if you are interested in doing that. You sure can do that. You can, of course, use any number of other things. In fact, we have lots of different charts that we personally track, and of course, you can sure do that. There's all sorts of things. You can track different market indexes. You can track the U.S. broad market. You can track large cap stocks. You can track real estate investment trusts. We have all sorts of things across the board that we track all the time. And that kind of stuff is a great deal of fun. You can also track stocks, Bank of America, and Apple, GE. And again, all of our rules continue to apply. Sometimes people say, well, why don't you track stocks? Well, here's the problem. Before you go out and buy a stock, there's a lot of information you need to know. You need to know the X date. You need to know when they declare their dividends. Last thing you want to do is buy just after a dividend's declared or sell right before the dividend is paid and lose that potential. You also want to make sure that you know when earnings are declared. You don't want to buy just before earnings and go through earnings and see what you thought was a profit be a crash. There's all sorts of reasons that mean that before you start buying stocks, you've got a lot of additional information that you need to know. The one thing we also like about indexes is no matter what might happen to Cisco on any given day, or AT&T or Ford, if the chairman unexpectedly dies, if there's an accident, and something bad happens, if there's a bad earnings report, if you're tracking pharmaceutical firms and a certain drug doesn't make it through its FDA approval process and the stock crashes, that typically doesn't happen with an index. We feel like stock indexes like SPY, the S&P 500, QQQ, the NASDAQ 100 are just easier to track overall and are less subject to crazy things happening. Now, sure, if there's a terrorist attack on our country, if something happened to our president, if something happened to an important leader, or something totally bizarre, a bad tragedy happened, yes, or bad economic indicators unexpectedly came out, yes, those things can also get hammered, but doesn't happen nearly as much in our experience. It's easier to track. Folks, that's where we are as we end the day on Tuesday and go into Wednesday, the 9th of August. We so appreciate you being with us. We do want to encourage you, have questions, problems, concerns. Hey, you can always write us, cw@chartingwealth.com. Please do subscribe to our YouTube channel, where we also post all of our videos. And please, more than anything else, subscribe to the Daily Market Podcast and get all that free material and updates constantly from us each day that we send it out. We don't spam you. We don't send out anything but our daily email. Also, you'll receive instructions if you sign up for our Daily Market Podcast at chartingwealth.com. You'll also receive instructions on how to register for our text notification service when there is a weekly vertical crossover. Weekly vertical crossovers are typically the best means of jumping into a changing trend. And again and again and again, they perform beyond our wildest expectations. Well, if you sign up for our free notification service via text messaging, instructions are there. If you subscribe to our podcast every day, you will actually get those instructions on how to do it. And like everything else we do here, it's absolutely free. God bless, my friends. All the best from the entire team here at chartingwealth.com.